A fantastic morning to you all. Welcome to the May edition of the ACAIN workshops. We are very lucky. This month we have Ms. Oluwabusola Orija, who is going to be talking to us about financial planning tips for self-employed authors and illustrators. I hope you enjoy it.
Good morning. Thank you for having me. Thank you for having me. So without wasting too much of our time, I will just go straight to the presentation. So I would start by sharing my screen. Just a second, let me share my screen. Okay, so like the first speaker rightly mentioned earlier, would be discussing financial planning for self-employed individuals. And as she said as well, that this is what will I call it now? A forum to foster economic growth. And there is no way we can foster economic growth without talking about financial planning. So as business owners, as business owners and as business owners, you are contributing a lot to the economy. So how do we plan our finances? How do we plan ourselves in such a way that the business continue to progress and we don't have a failed business? Because it is said that about 90% of startups usually fail within the first 5 years. They usually fail. And then I've had to think about it a number of times that why is it that businesses in Nigeria don't have history? Why don't they have years of establishment? You would see countries, international companies that have been running for 100 years, 200 years, 300 years. And when you come to Nigeria, hardly would you find an indigenous company that has been around for a number of years. So what is it that we are not getting right? And the first thing that comes to my mind is management. And when you talk about management, is a greater percentage of what management is all about. So without wasting our time, I will go into defining what just a second. Financial planning. What is financial planning? What do you understand by financial planning? I guess that this can be an interactive section. If I can get your views, what do you think? What is your expectation when we talk about financial planning? What comes to mind? Does anybody want to share anything? Hello.
Okay, this is Chinere. I think what comes to my mind is, budgeting for because for us as authors, so budgeting for any book project, thinking through what it will cost and how you're going to get the money.
Budgeting. Okay, I hear budgeting. All right, thank you very much. Who else wants to say something? Any other contributor? Okay, if there is no one else, let me just say that from my slide, you can see our from different perspectives what financial planning is all about. Financial planning goes beyond budgeting. It's an ongoing process that looks at your entire financial picture in order to create strategies for your long-term and short-term goals. So as an author, as a business owner, I would want to believe that you have a plan. Short-term goals and long-term goals. What do you plan to achieve in the short term? What do you plan to achieve in the long term? Do you want this business to do you want it to outlive you? Do you want to outlive this business? What do you want to achieve in the next 1 year, in the next 2 years? So these are the things that you need to have at the back of your mind before we go into financial planning, because the financial plan is going to support your business plan, not the business plan supporting your financial plan. So like rightly said, budgeting, but budgeting is just an aspect of financial planning, not the full picture. So also financial planning is a process of framing objectives, procedures, programs, and budgets regarding the activities of a concern. It involves taking a comprehensive look at your financial situation and building a specific plan on how to reach your goals. So like I said earlier, the financial plan is to support your goals in the first place, not just waking up to think about what financial planning is. So the last definition is going to take us into the total scope of this presentation. So financial planning is a process of taking a comprehensive look at your financial situation and building a specific financial plan to reach your goals, like I said earlier. So as a result, financial planning often include multiple areas of finance, such as investing, taxation, budgeting, retirement plan. So those are the things that we are going to be talking about today. We are going to be looking at. So all of these aspects of financial planning, they are a whole scope, a whole subject that you can learn, that you can take a whole day to learn about. So what we are going to be looking at today is just going to be the foundation, the basics of all of these aspects of financial planning. And then you on your own can decide to go ahead to take courses, research on all of these aspects of financial planning in order to have a balanced view on how you want to go about the plan. So the 6 pillars of financial planning that I'll be discussing with you today is going to involve cash flow management, investment planning, risk management, retirement planning, tax planning, and estate planning. As a business owner, as an author, you're going to be involved in all of this. You cannot say, I don't know about these things, that you just want to focus on writing your book. But that is not how a business is managed. That is not how things are done. So if you're going to be planning to have, if you plan to have a successful business, a business that is thriving, a thriving business, and you are going to need to look at all of these aspects of financial planning. So when we talk about cash flow management, like the name, in simple terms, is understanding your cash flow. So as an author, what are your sources of income? It's very simple, just the basics. You know, in Nigeria, I've realized that people don't take things seriously when it is not difficult, when it is not hard, when it's not said to you that, oh, you need to employ an accountant to use all sorts of tools and all of that before you can understand your cash flow management. No, it's not that difficult. It's not that complicated. It can be as simple as you just opening an Excel. When you open your Excel, create credit, debit. Simple. Credit, debit. So credit is what is coming in. What are the sources of income? What are your identified sources of income as a business owner? So when you sell your book, the source of income. When you are called to speak, maybe at a school function, or because you are children authors, maybe when you meet children or encourage children, maybe you are paid to speak somewhere. Maybe you are also the one managing your publishing and all of that. You go into publishing as an author. So whatever it is that the specific cash flow is, you need to understand it and monitor all of these sources, all the sources of income. Then as well, what are the things? What are your costs? What are your expenses? So in simple accounting terms, in simple financial terms, the moment your credit is more than your debit, what do you think is going to happen? Can I get a response? Once you have a situation where what is coming in is more than what is going out, what do you think is going to happen? Am I the only one on this chat right now? Can I get a response? Anyone there?
Okay. We're all shy. We're all shy creatives. Oh, okay. Someone is brave enough to.
I would expect that people, authors are supposed to be more to communicate more. Yeah. Okay. Anybody wants to say something? When what you are earning is more than what you are spending.
So possibly profit.
Fantastic.
Possibly profit.
Fantastic. And when reverse is the case, when what is coming in is lower than what is going out, what do you think is going to happen?
Loss. That's the loss.
Great. So you see why cash flow management is very, very essential. So, you know, as a business owner, there is the temptation to have, you open your company account, and anytime you need funds, even your personal funds, you run to that account. So, you know, you need to be able to separate. So apart from, so that's my first step, point is that you need to know what comes in versus what goes out. My second point on cash flow management is your ability to separate company money from personal money. So, you know, because I've worked in the banking sector for quite a while, I can tell you that a lot of mistakes that Nigerian businesses make is that they cannot separate personal finance from corporate finance. So how does this happen? So, you know, when people come to us, so when people say, I went to the bank, I wanted to take a loan, They told me to go and bring my grandfather's burial certificate. They told me to go and bring, no. So, you know, it's all about understanding the process. The bank wants to see, they want to see evidence, they want to see documentation, they want to see history, they want to see what you have done with the company's money before you come to borrow the bank's money. Because I tell people that the bank does not have money on its own. It has only collected money from somebody else to loan to you. The bank is just like a conduit, collecting from somebody that has come to deposit and loaning the funds out. So for me to be able to loan somebody's funds out, I have to trust the person that I am loaning the money to be sure that the person can repay me. So your ability to separate your personal finance from corporate finance will help you to be able to get loans easily from banks. Would even help you to see if your business is thriving. So usually when you have your corporate funds, you are supposed to pay yourself salary as a business owner. When you are pressed for cash, you are not supposed to run to the company funds for personal cash, for personal needs. This is a mistake that a lot of business, especially small business owners, this is one mistake that we make. So separate it, all the costs that goes into you publishing your book, into the sale, into you authoring a book, the writing, whoever you pay. If you're using if you're a ghostwriter, for example, and you earn money from ghostwriting, let it go into all the sources of it, let it go into the company account. Then at the end of the month, your part of your plan is that you pay yourself as a business owner, whatever you pay yourself. This is what I earn from my business monthly. Then you transfer that to your personal account and let your salary go into your personal account. And that is where you spend your own personal funds from. Not that you need something personally, you run to the company account. So I think that's, let me stop there on cash flow management. So I'll just quickly recap again that you identify and manage all sources of income and expenses. Number one, keep track of that, all your income and expenses. Then number two, set personal finance from company finance. Then number two, I'll go into investment planning. What is investment planning? So people usually mix this up. Investment is different from savings. Savings and investment are not the same thing. Savings is funds that you know that you're going to need in the nearest future and that you put aside. Funds you know that you're going to need in the nearest future and you set it aside. Savings is, for example, there is something they call emergency funds. Usually, all these big financial experts will tell you that you need to have 6 months of your salary kept aside for rainy days. So in investment planning, investment, like I said, is different from savings. When you have a saving, you can put your savings in your savings account. But for investment planning, like we mentioned earlier when we're talking about cash flow management, so when you have a profit, what is your plan for that profit? Look at the business. Do you want to push the funds back into the business, or you want to put it into investment? So investments are usually long-term, they're usually long-term oriented, as in the process of matching your goals and objectives with your financial resources. So this investment planning, investment is a long-term, you have to have a long-term orientation for investment planning. Then we're going to discuss risk management, retirement planning, tax planning, and estate planning. So let me just go ahead. So we've already spoken about cash flow management. So let's go into investment planning. So when we talk about investment, like I said earlier, savings is not investment. Investment is more long-term. So you need to identify low resources of investment. For starters, especially when people that are just coming to invest, if you're not a professional investor, don't look for investment that are savvy. Don't look for investment that requires a lot of expertise. Something simple for you to put your funds into, like fixed deposit. That is as simple as it gets. Money market mutual funds, federal government bonds, euro bonds. These are funds that are almost secure. Yes, there might be fluctuation in the market, but they are easy to understand, they are easy to learn, they are easy to monitor, and you can easily come out. They are also almost liquid. You can almost come out of it. So when we're talking about investment as well, like I said earlier, I'm just giving the foundation. Investment planning is something we can discuss all day. But because we just want to have, this is just about giving you the foundation. And like I said earlier, you can now decide to go and register for courses, go and research on your own to learn so much about all of these things. So also when you are investing, I usually advise clients, you need to learn to invest consistently. So if, for example, every month, if you have done your cash flow management and you realize that the business is earning this and this amount. So don't say that you cannot invest for the business or you can only invest personally. You also need to invest for the business, because investment is something that you put aside, hoping to gain profit in the future. So investment doesn't even have to be just a money market fund. It can also be you acquiring assets. You can decide to acquire assets as well. So investing consistently is also a good thing, especially in this era of volatility. So what that does for you is that it helps you to average your cost into investment. But don't let me go deep into this. If you need to learn more about investment, then you need to read about it and talk to a financial advisor. And I would also want to talk about risk management. Risk management is also a very strong pillar. This is a very, very important pillar. So when you're applying your finances, because we're a very religious country, we're in a very religious country, people tell you God forbid and all of that. But the truth of the matter is that when you run a business, you need to have plan. You need to have you need to weigh your risk. You cannot do business without weighing your risk. So sometimes in business, there will be the days where there is surplus and there will be the days where there will be not enough. So how are you going to manage your risk? So the first thing you need to do in risk management is to understand the risk of the business that you are in. What are the risks that you are exposed to in this business? Do you see yourself making sales every day? Are there going to be days that you make sales? No. Are there going to be sales that you will not make sales? Yes. Are there going to be days that you make a lot of sales? Yes. Are your books online for people to purchase and you wake up one morning and there's a lot of sales? So those are the things that you need to think about. So the risk can be managed through having emergency funds, like I mentioned earlier. Yes, you have emergency funds. Then you also need to get a life insurance. You as a person, and also for your workers, if you have business partners, for your books, are you covered? So for insurance, for risk management, the way to mitigate it is insurance. And for you to be able to know the kind of insurance that will work for you, then you will need to talk to an insurance company. So before you even talk to them, like I said earlier, you can also do your own research on the kind of business that you are running, because I cannot speak to everybody. I cannot speak to everybody at the same time. You need to understand the kind of business you are running. If you are the one doing everything by yourself, if you are self-published, if you are also managing your sales yourself, then this will help you to understand the kind of insurance. You have a life insurance to cover you. So we'll go to the next slide and we'll also talk about tax planning. You know that Lagos State and then also Nigeria now is now very, very particular about tax. So as a self-employed, you would also need to take care of your taxes. You cannot just continue to earn funds and not pay taxes. And now in Lagos State, for anything that you are even planning to, if you want to acquire some form of asset or get some form of funding, they are going to be asking you for your tax payment. So you will need to consult an accountant. There are even some of these tools are also available online for you to look at. So you need to register as a self-employed with the state tax authority. You also need to file your assessment annually and also work with an accountant to plan your taxes. There are tax consultants all over that don't charge as much, and you can also learn about it. So let's also go to the next slide. We'll also talk about retirement. You're not going to be working forever. You're not going to be working forever. There's going to be a time when you would not be as agile as you are now. So while you are working now, you need to plan for retirement. We need to look at the long term. When we talked about your goals earlier in the first slide, what we said that you need to have short-term goals and long-term goals. And your long-term goals, your retirement planning has to be part of your long-term goals. So you need to understand the importance of pension at this point. And I know that a lot of the pension funds management companies, a lot of these companies have pension fund schemes where you can pay as little as 5,000 naira monthly towards your pension. And then also, apart from the commitment to make a regular payment to your retirement planning, you can also do voluntary remittances every month and consistently, as it may be. It can be quarterly, it can be half yearly. So that is that on retirement planning. Then we'll also talk about estate planning. The moment you have an asset, so as an author, I would expect that you would have things like trademarks that are in your name and books that are yours. So the moment you have something, an asset, anything that is an asset that is yours, I would expect that then you need to have a will. You don't need to be, as long as you're above 18, you can get a will. So you need to read about trust and wills, get your life insurance and other forms of insurance to provide for your beneficiaries and for anything unforeseen. So at this point, I think I've been able to cover quickly what financial planning is all about from my point of view. But if there's anything you want me to shed more light on, any questions and any clarifications at this point?
Hello. Thank you so very much. I want to apologize for my tardiness. I just flew in this morning and I slept through all my alarms from the time I'd passed away. They had to come to the house to come and look for me. Anyway, so I'm really sorry, and I'm glad to be. Not at all. It's my fault entirely. Thank you very much, Miss Orija, for very insightful and kind of seminal presentation, which helps us as writers to kind of figure out how to navigate a very precarious, actually, financial environment. So it's now time for Q&A.
Yes,
and I'd love to take questions from other listeners to see if anybody else has questions. But I think I should lead with the questions, because you said that writers would generally maybe have to work with an accountant rating income. And I just wanted to know from you that, whether it's possible, I mean, as a writer, how much of these finances can you handle yourself without involving a second party? And I ask because, I mean, just by virtue of being a writer, it means you're already quite broke. And if you're taking on other services, those are extra expenses. And I'm just trying to think what's possible here.
Okay, great. Very, very valid question, and very good question as well. Thank you. Truly, yes. When you're starting as an author, or when you're an author, you feel like you don't have enough funds coming in yet, and then why would you need to? Really, it's about discipline. For me, it's about discipline. So you can handle these things yourself, really, without involving an accountant or a tax planner, estate planner. You can actually do everything, because all of this, everything is online these days, really. If you Google estate planning, all of the, they've created all sorts of softwares for you to use. So that's why I said it's about discipline, and that is where individuality comes in. So as an individual, if you're somebody that knows how to get things done yourself, you can do everything. To file your taxes, it doesn't take a rocket science. So what is tax trying to help you achieve? So for example, in tax planning, what is it trying to achieve? Tax planning will help you to see how you can reduce what you pay in taxes.
I see.
So if you think you can do that calculation yourself, the tax to now see what your net profit is. Yeah, so when they're able to get your net profit, then you get what are the things that you can exclude from disclosing to the government. So by the time they help you to get all of that done, then you pay less tax. But rather, if you feel you can do it yourself, why not? But if you think that your tax can be reduced and you need the expertise of someone who is in that space, then really, and it's not everything that you pay for. There are some things you can negotiate. As an author, you can decide that, okay, rather than pay you, I can give you a copy of my book. Some people like that can be creative with it, and then they don't people that are also running. How do I say it now? There are some of these people that are also running very small scale businesses, and then they are all available online. So really, it's about the individual.
Okay. And a small follow-up question to that is, I mean, I have had experience with some accountants before. For instance, it took me a while before I could even find an accountant that understood taxes for an NGO.
Yeah.
So the general sort of expertise that people tend to have is when you're working with a company. Comes to the time who has experience in that area, or else they can really waste your time. And I was just as who is, if you're in this sort of doing this sort of creative work, is it any accountant that can navigate this? Is it any accountant that can really kind of help with one's taxes? Because I don't quite know what category. I mean, you're self-employed. Is it every accountant that can deal with that? Is it common knowledge? I guess that's what I'm trying to ask.
Yes, I get your question. Unfortunately or fortunately, the Nigerian environment, you don't see a lot of people going into area of specialization. That's a challenge we see in Nigeria. So usually it will help. What usually helps is that you meet somebody, the person tries to understand, then they might use you as test run, and then they get to understand your business and then get into that industry, and then you realize that, okay, I can do that. And then the person tries to start. Then if they get more businesses from this field, then they can decide to now go into the specialization that you require. So it's going to be based off your own experience, really. I'm not going to lie or deceive you and say, oh, they're available. No, usually the way Nigerians are, they just get the business from general knowledge. They try to get into specialization, and then they use you and they become experts. So be it. And if not, they move on to other things. But trust me, they're not making money from your industry. You're not going to get a lot. But then, like I mentioned earlier, going back to what I said earlier, the individual now, being a self-employed, you now have to go the extra mile to read yourself. What does the government say? What does the policy say? What I can get on software can I download to help me to understand these things myself, so that when somebody who claims to be an expert does it, then I can easily get the see if there are any loopholes, really. So it takes a lot to be self-employed. It really does take a lot.
Okay. Well, thank you for those very helpful answers. So I'm waiting to see if any of my colleagues have questions. If you can drop the questions in the chat or indicate, that would be amazing. If anybody else has questions. I think it's just the fact that your presentation was so comprehensive, and there was so much clarity.
Yeah, for me, simple does it. Yeah, like I said, Nigerians, like when something is not difficult, when it's not easy, then it's not fantastic. But really, life is, for me, my point of view, life is easy. Everything is easy. Just get the basics. From the basics, then you build on the bigger knowledge.
Okay. Oh, okay. Somebody has a question on mute and ask your
hello everyone. Hi Lola, nice to see your face. Thank you so much, Busola, once again, and hello everyone. I hope the internet kept going in and out, so okay. I don't know if everyone's also had a chance to introduce themselves, etc. Because that's always nice, especially if we have some new members, etc. So but my question is about growth. So as authors and illustrators, most of us are self-employed. So, if we follow your advice and make sure that we distinguish the, the business account from the personal account, right? And we're paying what we earn, into our business account. How can we grow our wealth? Are there any wealth growth, strategies or tips that you can give self-employed people who may not necessarily be earning in the top 1%, but and do that can help grow and build our wealth towards our our pension, our retirement.
All right, thank you for that question. Very, very good question. I'm not sure I mentioned this during my presentation, but I want to say to people that, to everyone on this call, that what you don't do when you have very little, you're not going to do it when you have a lot of money. So it's about the discipline, it's about the orientation, and it's about the commitment to what you're doing. So self-discipline is very key. So if you say that you don't earn a lot, you have a lot of expenses, out of this little money I'm earning, you still want me to save, you want me to invest, you want me to do all sorts of things. If you don't do it now, I'm telling you that the moment you start making big monies, there are going to be excuses as well. So talking about, in response to your question, yes, if, for example, you do your cash flow management, cash flow planning, and you come in, you have income, and then your cost, you are able to beat down your cost. In any organization, cost is a very big deal. There are people that sit down to look at how to cut costs. Cutting costs is one of the major things that they do in big organizations. And then you increase the moment your cost is not up to is more than your income. Number one, the first thing you do is cut the cost. Number two is to increase your sources of income. So as an author, you say to me, how do I increase my source of income? So there's something that they call ghostwriting, to the best of my knowledge. I know things like ghostwriting. It's not all of these big speakers that have that write their books. They use ghostwriters. So what are you doing? You cannot just write your own book. You can ghostwrite for people and earn money. If you're going to publish, you can go into publishing as well, not just being an author. So one source of income really is not going to cut it. That's the truth. That's just the truth. One source of income in this economy, all over the world, not just in Nigeria. That's why even people that say the jackpot and all of that, you see them doing 2-3 jobs. One job is not going to cut it. So you cannot sit down and say, I'm a children's author, and that is all I know how to do, and that is all I'm going to do. This financial planning that we are discussing, by the time you decide to go into it, you get interested and you learn about it, you can teach it to other authors and earn money from it. So like I was saying, when it comes to personal finance or growth, like you said, growing your wealth, Rome was not built in a day. In Nigeria, we like the abracadabra effect. But things don't happen all of a sudden. It's about planning and it's about time. So if you earn 10,000 naira and you plan yourself, out of that 10,000 naira, you can take 1,000 naira and save it. It's about it's about that culture, that discipline of putting something away. So today, you have put 1,000 aside and kept it. The day you earn 1 million naira, it will be easy for you to keep 100,000. But if you have 10,000 naira and you say you cannot put 1,000 naira because you have so much to do, it's not going to happen when you have a lot of money. So you are also growing as an individual. Nothing just happened. Like in this life, nothing just happened. You have to work it. So you have to discipline yourself. You have to create that culture. So there are a lot of mutual funds in banks now. They have a lot of mutual funds. Even if it's a savings account that you open, now savings accounts are paying a lot of interest. You can get as high as 4%, 5%, 6%. If it is 1,000 naira you are putting aside every month into a savings account, it is growing. 2,000 naira is different from 0 naira. And it's a matter of time. As you grow, definitely you are going to grow in your place of work. You're going to grow in this business that you are in. You that started with 1,000 naira this month, you're going to grow to be able to save 100,000 naira someday. So it's about creating that discipline.
Thank you so much for that answer. It's something that I often tell people as well, who ask me that they tell me they want to become writers and they don't want to do anything else. And what I tell them is that even at the stage that I'm in, I still have to work with a bank 2 days a week. It's almost impossible to rely on your writing. And like you said, it's not just Nigeria, it's everywhere in the world that people have to kind of have other streams of income. Any other questions? I know that Madam Chair was was asking something about other streams of income. Would you like to ask again, or do you think that's been covered?
Oh, hi. Sorry, I typed in a couple of questions in the chat group.
Yeah.
Like, can you tell us if, oh, sorry, someone has their hand raised. It looks like Basirat, I believe, has her hand raised.
Oh.
I don't know if that's already been addressed.
I don't know. I can't see her raised hand,
Okay.
unfortunately.
Basirat, do you have a question?
I think because I'm using.
No, thanks. My question has been addressed.
Okay, fantastic. Thank you. So like the questions that I was asking that I typed into the chat group are there any financial instruments that someone earning 50,000 a month, for example, can invest in? You know, is there something that they can quote unquote pay small
Yeah.
that we can know about, you know, generally or specifically? And then do you advise investments in stocks and shares or EFTs, or do you think that maybe that's something that's out of our reach for now? Thank you.
Okay, so like I said, I said it's better to start with the simple things that you understand. So if it depends on the kind of person you are. What kind of so for example, do you understand the investment world very well? Do you know about it? For example, ETFs are very sophisticated forms of investment. Why are you doing sophisticated forms of investment when you have not started with these little mutual funds that you understand, that you know? So it's better for you to do things that you know, like savings accounts, mutual funds accounts. There are a lot of banks and asset management firms that tell you to pay to bring so amount, they pay you so interest per annum. Start with those ones. Then as you learn and grow and understand how investing works, then you can grow to the next step. It then depends also on your risk appetite. We do there are things we do in the bank called risk assessment. They assess your risk, assess your risk appetite, and then advise you. So this kind of thing, you will need to talk to an investment expert in the banks or asset management companies here. So it's not a one size fits all for everyone. It depends on your risk appetite, your risk orientation, your objectives as well. For investment, yes, mainly everybody has them almost similar objectives: regular income and capital preservation and all of that. But it's something we need to discuss as individuals.
Could you check the chat, please? There are a few questions there for you. Can you access the chat?
Okay, I'm doing that now. There's a question from Chigozie Mbaduga. Thanks a lot for the opportunity. To be honest, if you're like full-time most of the time. Okay, great. So any funds that you put into your company is called equity. So you're going to record that as equity. So that is money that you have paid into the business. And then as the business grows, you have the right to pay yourself back. How do you want to get your money back? It's also something you put in the plan. When the business starts to make the money, do you want to get it back in full at once, or you want to stagger it over a period of time? So like I said, money put into the company is an equity from you.
Okay. Any other questions or comments? Okay. Fantastic. And there's Chinyere Ifediora there saying, thank you so much for such a beautiful, clear presentation. So it appears that Chinyere has a question. Thank you so much for that, Basira. That was very useful. I completely agree with you. Chinyere, are you there? You can take the floor.
Okay, yes, I'm here. Thank you. The question is on risk management. I noted, I think that as an author, commercial and maybe logistics risks are the kind of risks that I'm aware of, I think can happen, like maybe losing books to destruction or getting it to the bookstore, things like that, or poor production. You can lose books. Then, of course, commercial risks. I wanted to ask our speaker to, speak on how we can mitigate this kind of risks as authors, how to mitigate our commercial risks and logistics risks.
Thank you for the question. Yeah, so sorry, I may not be able to answer your question fully. When I actually saw the question earlier and I was trying to see if I could get any information on that. But the best person to ask would be maybe the insurance companies. If you know maybe anyone at any of the insurance, reputable insurance companies like Leadway, GT Homes, or any of them, I think they will be able to advise if they have any form of insurance to cover such risk. Especially for the logistics, I'm sure they do, but especially for the book publication, losing books to bad publishing.
Thank you very much.
Thank you.
Are you happy with that answer?
Oh, yes. I'll check that out. Thank you.
Thank you so much. Thank you so much to our speaker who came and gave us this amazing presentation. It would be awesome to also see you in person at some point. I'm quite excited about that possibility. And I want to say thank you on behalf of every single one of us for giving us that, like I said, insightful and extremely helpful presentation. We truly appreciate it, and we hope our paths cross again soon. Thank you so much, everyone. Thank you for joining, and look forward to seeing you next time. Thank you.